Washington, D.C. In a move that was both predictable and significant, former President Donald Trump has reversed his decision to impose tariffs on automobile imports from Canada and Mexico. The decision, which initially sent shockwaves through financial markets, was suspended just 24 hours after its announcement, marking yet another economic retreat from his administration. From his first term in office, Trump has cultivated a reputation for making abrupt decisions only to later walk them back under economic and political pressure. This latest reversal came as no surprise to Wall Street, which has learned to anticipate his erratic policy shifts. Investors and financial analysts know that the former president frequently introduces protectionist policies without a clear understanding of their effects, only to be forced to correct them when the consequences become unsustainable. Tariffs have long been a staple of Trump's economic strategy, but his lack of understanding regarding their mechanics has sparked continuous controversy. Despite repeatedly claiming that foreign countries bear the cost of U.S. tariffs, economic experts have proven otherwise. Tariffs function as a tax that falls directly on American consumers and businesses dependent on imports. One of the clearest examples is coffee. Unless one consumes a limited production coffee from Hawaii, all coffee beans sold in the United States are imported. Placing tariffs on such products does not impact foreign producers. Rather, it affects local businesses and consumers who rely on them. This fundamental economic principle seems to have eluded Trump, but not financial markets, which reacted negatively within hours of his tariff announcement. The response was swift. As soon as the new tariffs on Canadian and Mexican automobiles were announced, investors panicked, triggering a sharp drop in the stock market. The uncertainty fueled fears of an economic collapse akin to the Great Depression, when in 1930, the U.S. Congress passed the Smoot-Hawley Tariff Act, which increased import taxes and exacerbated the economic crisis. The Wall Street Journal, one of the country's most respected financial publications, issued warnings about the risks of a recession driven by Trump's protectionist policies. The possibility of a trade war with Canada and Mexico, two of the United States' most crucial trading partners, alarmed the business community. The automotive industry, one of the hardest-hit sectors, warned that rising costs could lead to vehicle price increases of up to $20,000 per unit. Investors wasted no time reacting. Reflecting their distrust in Trump's ability to handle the economy, the stock market plunged in the early hours following the announcement. However, as soon as the White House announced that the tariffs would be paused for 30 days, stocks began to recover, confirming that investors had anticipated another reversal. While Wall Street investors sought to protect their assets, the Canadian government quickly issued a strong response. Prime Minister Justin Trudeau took a firm stance, accusing Trump of trying to destabilize North America's economy with illegal and unjustified tariffs. In a statement directed at the American public, Trudeau said, "We don't want this trade war. We want to work with you as friends and allies. But if your government forces us to defend our economy and our workers, we will do so with all the strength necessary." Trudeau's remarks were seen as both a challenge to Trump's administration and a call for rationality. Canada, traditionally a stable and reliable U.S. partner, now faces the prospect of economic retaliation in a conflict that analysts say would only harm both nations. The tone of Trudeau's speech resonated with financial markets and public opinion. His composed, fact-based approach contrasted with Trump's silence. The former president avoided mentioning the tariffs entirely in his speech before Congress, even though his administration had caused a market drop in less than 24 hours. One of the Trump administration's justifications for imposing these tariffs was the claim that Canada was not cooperating in the fight against fentanyl trafficking. However, this assertion was quickly debunked with factual data. In an entire year, only 43 pounds of fentanyl entered the United States from Canada, a quantity so small that it could fit in the trunk of a car or be hidden under a desk. This argument was swiftly discredited by both the Canadian government and border security experts. The real reason behind Trump's move appears to be political, a distraction strategy to divert attention from other failed promises, particularly his unsuccessful mass deportation plan. Another topic conspicuously absent from Trump's speech was the future of key social programs like Medicare, Medicaid, and Social Security. Despite previously promising not to touch these programs, the Republican Party has already voted to cut $880 billion from Medicaid in its budget proposal. Experts warn that these cuts could lead to the closure of thousands of nursing homes across the country, as Medicaid is the primary funder of long-term care services in the U.S. This could mean that thousands of elderly individuals may be evicted from their residences with no viable alternatives. The impact of these cuts could overshadow even the economic consequences of tariffs. While tariffs affect trade and product prices, eliminating healthcare access for the most vulnerable Americans could trigger an unprecedented humanitarian crisis in modern U.S. history. Trump's reversal on tariffs highlights yet again his lack of a long-term economic strategy and his tendency to make impulsive decisions without considering their consequences. Wall Street, world leaders, and American citizens will continue to closely monitor his next moves. The key question now is, how much longer can Trump continue playing with the economy before triggering a major crisis? One thing is certain. Every erratic decision he makes will be corrected by the markets and by those who truly understand how the global economy works. However, the cost of these mistakes may be too high for the financial stability of the United States and its allies. This has been a special report. We will continue monitoring developments to keep you informed on this critical economic issue.